If you're new to crypto, there are three indicators that you need to learn as soon as possible. Because once you know how to use these indicators effectively, you are going to have an advantage over most other people here in the crypto market, which could open you up for the opportunity to generate some solid gains. And so today I'm going to walk you through what these three indicators are and briefly explain to you how to use each one of them. So I don't want to waste your time at all. So let's jump into the charts and let's go over the very first one. Now, the first indicator that you need to learn as soon as possible is the RSI. And what you're going to do is you're going to head over to tradingview.com. You're going to select a chart. You're going to click indicators up here, and you're just simply going to type in RSI. Now, RSI stands for the Relative Strength Index. And what this indicator does is it tells you more information about the relative strength of a crypto. Or in other words, it'll tell you if a crypto is looking really strong or really weak. Or in other words as well, it'll tell you if a crypto is too high or too low, which will make sense in a second. Now, when this indicator pops up, which is this bad boy down here, you're going to see a couple different components. You're going to see a purple box in the middle. You're going to see numbers on the y-axis. You're going to see dates on the x-axis. And then you're going to see this purple line. And for now, you can just ignore this yellow line. You see this yellow line right here? Look, let's just actually go ahead and do this. We're going to go to settings. We're going to go to style, and we're going to just turn that yellow line off. We don't even need that for now, okay? And what we're going to look at is just the core of the RSI, which is, again, this box, the y-axis, and the x-axis, and this purple line. Now, this purple line is a reflection of the price, and it'll tell you a lot about the price. And what you'll notice is generally, when the price goes up, the purple line goes up. When the price goes down, the purple line goes down. Now, there are times in which the price will go up and this purple line won't go up. I'll explain that in a future video. You don't need to know why that happens. Just know it's called a divergence, and I'll explain that way later on in the video. But if you're new, that's unimportant right now. Let's stick to the basics, okay? So again, this purple line is a reflection of the price. When it goes up, oftentimes the price goes up. And when it's going down, the price is also going down. Now, what you need to be watching is how this purple line is interacting with this purple box in the background. Okay, because when, for example, this purple line goes to the top of the purple box, that means that the price is starting to get a little bit too high. And the top of this purple box is reflected by the 70 level on the y-axis. You see this number 70? That's the 70 level of the RSI indicator itself. And anything above 70 means that the price is starting to get a little bit too dang on high. And when the price, or when this purple line goes all the way to the bottom of this purple box to the 30 level, as you can see here, that means that we're getting a little bit too low. And when it's right here at the 50 level, which is exactly the middle between the 70 and the 30, that means we're at about neutral. So what you can think of this is like basically saying, okay, purple line going up to the top of this box, boom, too high. Purple line going to the bottom of this box, boom, too low. Purple line in between both of them right in the middle, we're at about neutral. And that's all you really need to know in the beginning. That's all you really need to pay attention to. But let me show you how you can actually apply this to a chart and use it practically in your trading, your buying, your selling, whatever it may be. So let's say, for example, we're watching this crypto chart. We're on the 1-day chart. As you can see here, you see how it says D? That means 1-day chart. We're here on the 1-day chart, which means every one of these candles is 1 day. And we notice that Bitcoin's price in September of 2025 is pumping really heavily to the top side. And as it's pumping really heavily to the top side, we notice that this daily RSI now gets up to the top of this purple box and goes above it, actually pushing above the 70 level all the way up to 72. Well, we know, oh wow, the top of this purple box and higher, very, very high. That's a little bit dangerous. So what might we do? Personally, I might take a little profit off the table. I might go in here and start selling some of my Bitcoin, knowing that there is a real risk of Bitcoin pulling back. And had we done that right here, when it hit the top, we would have actually perfectly timed the top of this move. Now, does the RSI always time the perfectly top and bottoms of moves? Absolutely not. But it just gives you a little bit of extra conviction of whether or not you want to take some profits or do some buying. And we can look at previous examples and see how that's held up. For example, we can look right here. The last time that Bitcoin was outside or above the 70 level was right up here, right before Bitcoin made this huge move back towards the downside. Then it did rally, sure, but it did really continue back downwards after. So that would have been a great time to sell there. Or another great time to sell could have been back here when Bitcoin's price was extended over that 70 level right before this pullback. So do you see how, generally speaking, when Bitcoin's price and other altcoin prices push above that 70 level, it's usually just a good time to take some profit off the table. Now remember, it's not always perfectly timed. And for example, right here, Bitcoin's price did go above the 70 level, and then it still continued upwards. So again, you shouldn't just sell everything based on this indicator, but it could still be a decent time to take some profits off the table. Now let's look at the bottom side and let's go to the last time that Bitcoin, for example, saw its RSI go below the 30 level. So the last time that Bitcoin's price went below the 30 level, which remember means too low, we can see that Bitcoin's price actually was all the way back down here. And although this wasn't the very bottom, this was still a very good time, a really good time to do some buying of Bitcoin because it started to rally, fell one more time, and then absolutely sent back towards the top side, giving anyone who bought when we fell below 30 a really good buying opportunity. And so, again, although it didn't perfectly time the bottom, it gave us a real good opportunity there as the price was dipping below the 30 level here on the RSI. So, the first indicator that you need to learn again is this RSI because it'll give you a really good understanding of if a crypto is too high, too low, or somewhere right in the middle. Now, before we get into the next indicator that you need to learn, which is called the Gaussian channel, I do want to quickly introduce myself if you don't know who I am. My name is Tyler Hill. I've been investing in the crypto market since 2017, and for the last 5 years, not only have I traded every day, but I've also built up an agency called Fluence, which manages hundreds of creators and works with thousands of creators, which gives me some extra insight behind the scenes of what's going on that I like to share here on this channel to help you get an advantage in the market. So if you do find these insights valuable, I would really appreciate it if you did subscribe to the channel real quick before we move into number 2, because again, we are going to be talking about the Gaussian channel. Now, if you want to access the Gaussian channel, you're going to do it the same way that you got to the RSI. You're going to click indicators. You're going to click GC. Real easy stuff here. And it'll pop up here for you. You're just looking for Gaussian channel. Or if you just want to make it easier, you can type in Gaussian channel. Boom. And it's going to pop up right here for you. Now, once it pops up, it's not going to pop up at the bottom like the RSI did, but it's actually going to pop up over on the left-hand side of your screen. See how it says Gaussian channel DW? Go over to this eyeball thing and just click it. Okay. And when you click it, you're going to see this bad boy pop up. Now, what we're going to do this time, though, is we're not going to use the 1 hour, or the 4 hour, or the dailies. No, we're actually going to go out to the weekly. I'm under the belief personally that if you're a beginner, the best way to use the Gaussian channel is on the weekly time frames, which means that every candle on your chart is 1 week. And the reason I say that is because this is going to give you a fantastic view of what you in general should be doing. Okay. So what I mean by that is if the price of your crypto is in the green, meaning that this Gaussian channel, which is this big band right here, if this is green, in general, you should be taking some profits off the table because we are in a bullish period for that asset. And if we are in the red, that asset that you're looking at, the channel itself goes red, in general, that's a good time to be doing some buying. Because remember, you always in crypto want to go against the grain. When things are good, that's when you want to be taking profit. And when things are bad, that's when you want to be buying. Or in other words, when the market is falling, you want to be buying. When the market is pumping, you want to be selling. Because if you do it the other way around, you're almost always going to lose. If you sell when the crypto market is in red and you buy when the crypto market's in green, you're not taking advantage of the opportunity as best as possible. And the Gaussian channel will tell you in general how the market sentiment is feeling. So what we can see is that this is Bitcoin's price for the last 5 years. And you can see what I mean. Most of the time, Bitcoin's price is in the green, right? And so most of the time as Bitcoin's price has been going up, we've been sat in the green, and this has been what's called the bull run. So the bull run is, of course, when you want to be taking profits. Now, I don't mean just take profits the second that we go green. No, maybe you'll look at your RSI indicator, wait for it to turn or to push above 70, and then you want to take profits off the table. But you'll know that you need to take profits because the Gaussian channel is in the green. Or let's go back in 2022 when we saw the bear market happening and we saw the Gaussian channel flip red. This was the best opportunity to be doing some buying because as soon as it flipped red, it signaled that we were entering into the bottom portion of the bear market, at which point we were able to do some purchasing here on Bitcoin's price. And then, man, oh man, we had some beautiful gains afterwards. So again, this is much more of a macro indicator and a much more simple indicator, and you can use it a lot more complex. For example, what you could also do is use the Gaussian channel for support levels and buy when the price of an asset comes back down to touch it, but we're not going to get into that right now, okay? The fundamental usage for the Gaussian channel that I like to do is simply just say, okay, in general, my bias is that I'm taking profits because the crypto market is saying the Gaussian channel in the green, and I'm going to be doing some buying when it's in the red. And we can see how this has held up basically since the beginning of time, really, with crypto, right? You can see back here. When were some of the best times to be buying? When the Gaussian channel was in the red. For the very first time, it went to the red right here. This is when Bitcoin's price bottomed out in this bear market before going in the green, offering us the opportunity to start taking some profit off the table. When was the next time that it was the best time to do some buying? Right here, when the Gaussian channel was in the red, right before Bitcoin rallied up, came back down, then rallied up again. The next time, when was the best time to be doing some buying? When the Gaussian channel was in the red. We were able to do some buying here, and then Bitcoin's price rallied upwards. And then you get a sustained period of being able to take profits off the table. And so this is one of the easiest ways where you can actually practice buying in the fear and selling in the greed by using the Gaussian channel to get an idea of how the general market of or sentiment of the market is. And now the very last thing that we're going to go over today is called liquidations. Now, I am going to warn you, this is a little bit more of a complex topic, okay? But I do believe that as a beginner, you need to understand how this works because these days, market manipulation, which I'll explain in a second, runs crypto. This whole crypto market is corrupt and it's manipulated. But if you understand how it's manipulated and what tools you can use to get ahead of the manipulation itself, you can actually put yourself in a fantastic situation where you can play the game just like the market manipulators play it. And so we're going to go over liquidations, but again, just the warning, it's a little bit more complicated. And if you do feel like it's too complex, just start with those first two indicators and come back to the liquidation map a little bit later on in your journey, okay? And one thing I will let you know, if any of this feels too complicated, the RSI, the Gaussian channel, what I'm about to talk about next, one thing that you can always do if you really want to give yourself that next advantage, that next leg up here in the crypto market, is you can go to the link down below and it's going to take you over to the Crypto School. It's a platform that we created years ago to help people just like yourself take their game to the next level. And I explain it all in a video right here. You can see testimonials, how other people are feeling. This is the home of thousands of people every single month who are trying to just get better at crypto. And one person watching this video right now who types in the discount code NOV3, like November 3rd, you're going to get 20% off. So check out that link down below and let's talk about the liquidation maps. So the liquidation map can be found on coinglass.com/pro/liquidation map. Or another thing you can do is just go to coinglass.com. You see how it says liquidation map right here? Hover over it, come back down to liquidation map. Now, we're going to ignore this one up here. Don't you worry about that. And we're going to ignore the one at the very bottom. We're paying attention to this one here in the middle. And let me explain to you exactly what you're looking at right now. So what you're looking at on your screen right now is what's called liquidation levels. Now, if you don't know what liquidation levels are, let me explain to you a little bit of context. So when you're in the world of crypto, you can do what's called leverage trading, which is when you borrow money from a platform or an exchange or a broker, whatever it may be, and you use that borrowed money to trade even more money. So you're taking a huge risk, right? Leverage trading is very, very risky. And when you leverage trade by borrowing someone else's money, you have what's called a liquidation level, which basically means that if you borrow money and bet that Bitcoin is going to go to say $150,000, but Bitcoin falls to $90,000, so it goes in the opposite direction of your trade or against your trade, that person that you borrowed money from can just take all that money back from you. And it's much more complicated than this, but this is the simple way to explain it. They'll just take that money back from you because that's your liquidation level, and that's the point at which it's too risky for them to let you borrow that money. So all of the money that you borrowed is gone, and the collateral that you put up for that loan is also gone. And so what we're able to do is we can see where people will be liquidated at, where their liquidation levels are, because the market is very likely to move in the direction of those liquidation levels. Now you may say, well, Tyler, why is the crypto market likely to move in the direction that will liquidate people? I mean, aren't people supposed to win? No. The crypto market, as I mentioned before, is corrupt and it's manipulated. And there are people at the top, market makers, centralized exchanges, and many more like Binance, Wintermute, etc., who actively, obviously manipulate the market. I call them lizard people here on the channel. And what they oftentimes like to do is force the crypto market in the direction of those liquidation levels, at which point leverage traders will lose in order for those positions to be closed, the collateral to be lost. And what happens is that as those liquidations occur, they funnel and flow their way up to those big market manipulators and centralized exchanges, so the market manipulators win. In simple words, when you get liquidated, that's really good for the people manipulating the market. And so what we like to do is look to see where will people be liquidated so we know the market has a bias and likelihood of going in that direction. So when you look at this chart, what you can see are what's called liquidation levels. So what we're looking at right now are the Bitcoin liquidation levels. So where will traders be liquidated while trading Bitcoin? And what we can see is there's a couple things here and I want to break them down for you. So on the x-axis, you're going to see Bitcoin's price. So it starts at 96,000, it goes all the way up to $119,000. This red line is a representation of what Bitcoin's price is at right now. So right now, as I hover over it, you can see that Bitcoin's price is at $107.6 thousand. Let's say, for example, if Bitcoin's price fell right now to $99,000, this red line would go all the way over here to $99,000. Okay. So this red line is just a representation of the price. Anything to the left of this red line is down. It means Bitcoin's price is going down. Anything to the right of this red line is up, meaning Bitcoin's price goes up. And what we can see are now bars on the left side and the right side of this red line. These are liquidation levels. Or in other words, for example, do you see this big line right here? I mean, this really tall blue, orange, and yellow line right here. This is a liquidation level. And do you see how it says cumulative long liquidation leverage 397 million? And above that, it says $106.4 thousand. What that means is that at the level, if Bitcoin's price goes down to $106.4 thousand, there will be $397 million worth of liquidations available to be liquidated. Or for example, let's go over to this bar right over here. Do you see how at the very top it says $103.3 thousand and below that it says 1.27B? That means that at $103.3 thousand, if Bitcoin's price falls that low, there will have been a total of $1.27 billion worth of liquidations that will have occurred. Or in other words, if Bitcoin's price goes down, that's the total amount of liquidations that will happen if Bitcoin's price falls. And this red line right here is a representation of the total. It tells you how much there is total to the downside. And to the upside, it's the same thing. You see this tall little bar right here, this one right here, that, and it says above it $111.121 thousand, and below that on the first line it says $1.59 billion. That means that at $111,000, there are $1.59 billion worth of liquidations available if Bitcoin's price goes up to that level. And what we like to look for is, okay, where are the liquidations at and what direction is Bitcoin most likely to go in? And so when I'm looking at this chart, one thing that I would notice is that this green line is higher than this red line. What does that mean? It means there are more liquidations that will happen if Bitcoin goes to the right, which means up. So more liquidations will occur if Bitcoin goes up than if it goes down. And knowing that the market manipulators will oftentimes benefit from the price going to the highest levels of liquidation, that would mean that Bitcoin has a bias to the upside. It does not mean by any means that it is for sure going to go up. It just means it has more of a bias, and that's what you need to look out for. Now, one thing you can also do is you can change your time frame. So instead of looking at the 1 day, which is more of a shorter time frame, you can look at the 7 day, which is a more midterm time frame. And when you look at the more midterm time frame, do you notice how this green bar goes way higher? It means that when you zoom out, there are way more liquidations to the top side than there are to the bottom side here on the more midterm. Or we can go to the 30-day, which is the even longer time frames. And what you'll see is that your prices expand a little bit, and now you can really see the big picture, which is that yes, there are a lot of liquidations to the downside, especially the ones right below us. But still, to the upside, there are way more liquidations will happen, which means that even if Bitcoin's price does go down a little bit, to liquidate these traders, there are still a lot of traders to be liquidated to the top side. And you need to, of course, assume that those market manipulators know this. The other day, for example, I don't know if you guys are going to know about this if you're new to crypto, but this was October 9th or October 10th. I can't remember the exact date. But the biggest liquidation event in history happened, which is when Bitcoin's price in the crypto market as a whole liquidated $20 billion worth of trades over the course of just a couple hours. And what's crazy about this is that on my channel, we didn't predict that the biggest liquidation event in history would happen, but we did predict that a big liquidation event was going to happen. And the reason we knew this was possible was because when we looked at this chart right here, the green line was way down here. The red line was way up here. And I said, listen, there are a lot of liquidations to the downside. Be very, very careful because at any given point, Bitcoin might crash to liquidate those traders as the market manipulators will benefit greatly from that. And just 4 days later, one of the biggest crashes in crypto history happened. And so again, you can't only rely on it, but you do want to use this to get a bias of where you think the market can and will go because it'll give you a clear picture of where the people who manipulate the market want it to go, okay? So if you can learn learn how to read these liquidation levels, if you can go to your chart and understand where we're at with the Gaussian channel, understand what the RSI is doing, you will be in a very, very good spot, and you will be at a much more advantageous position than almost everybody in the same experience level as you. And so hopefully these three indicators that we went over today were extremely, extremely helpful. And I hope, of course, that if you do find these sorts of videos helpful, you do like the video and subscribe to the channel, which of course is all down below. Now, remember, if you want to take your game to the next level, if you really want to go farther here in the world of crypto and learn what there is to know, I do highly encourage you to head over to our school, which is linked down below. You can sign up today because in the school, you can find more value than anywhere else. You can learn from me and our coaches. There's workshops, signals, live streams, and so much more, all available to you with the sole intention to help you level up. So check out that link down below. Subscribe to the channel if you are new, and I can't wait to see you all in the next one. See you later, everybody.